Okay, and welcome back, students who are taking financial accounting. In this series of videos, we are working on the Appendix B, the time value of money exercise problems that were assigned as part of the lesson in the digital study guide. And if you've watched the previous two videos here, and also the theory video for Chapter 7, you'll realize that we included the time value of money here because of having to calculate interest on notes receivable, and it seems to be the appropriate spot to cover the time value of money. The theory video for Chapter 7 doesn't cover in depth the whole concept of time value of money. That was done in the Math for Business / Applications section. Students that had Math for Business and Finance or had Math Applications will probably know that on the student community under the business group, there on the left-hand side, there's a section called Math for Business / Application, which was part of the math course, and that's where we covered in detail the time value of money. So here in this textbook, I mean, this, most likely you've seen that before. I mean, if you just happen to be taking financial accounting just as a standalone subject, well, then obviously you didn't. So go back and watch the theory video to see the how to get to those theory videos in the Math for Business / Application section. But the reality is you've seen this math before, so this here is a refresher. It is a highly important concept, and you will see it again and again in your studies as we go forward in different subjects. Okay, this is not the last time you'll see the time value of money. So repetition, does help in this case. And even though this isn't in this appendix, it doesn't cover as in depth as it did in the math textbook. It'll be enough to refresh your memory. So go back and watch those videos again if you need a refresher on the theory. But if not, then definitely at least watch these 3 exercise videos, and I'll just move on to what I need to next. Okay, and that is note. Accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. And so, like I said, in this video, we are working on the exercise for EB-3A. And I had, on another slide, I actually have the tables that we need. So I'm going to bounce up to those tables when appropriate. All right, so it says here, Hobart needs new manufacturing equipment. 2 companies can provide similar equipment, but under different payment plans. So we're going to be comparing the 2 different companies. And again, if you watched the previous video, you saw why, by reading something and trying to intuitively guess as to which option you should take, that is oftentimes wrong. It makes, you have to do the math in order to be able to determine which option is the most beneficial. In this case here, we're comparing 2 companies, right? So it says Tanner Manufacturing offers to let Hobart pay $55,000 at the end of each year for 4 years. All right. The payments include interest at 8%. Phoenix Corp will let Hobart make a single payment of $250,000 at the end of 4 years. This payment includes both principal and interest at 8%. Now, if you just pause for a moment and think about which one would be more beneficial, different people are going to, without doing the math, different people are going to, choose A. Some are going to choose A and some are going to choose B. The only way to know which one is the best is by actually working it out. So it says here, requirements: calculate the present value of each payment plan. And then 2, in addition to present value cost of the equipment, what other factors should Hobart Parts consider when deciding which company to purchase the equipment from? All right, so let's look at the 2 plans. All right, so for Tanner, it says it offers to let Hobart pay $55,000 at the end of each year for 4 years. So here's year 1, here's year 2, here's year 3, and here's year 4, and he's offering to allow them to pay $55,000 at the end of each year. At the end of each year for 4 years. The payment includes 8% interest per year. Okay, so if they're paying $55,000 each year, that's an annuity. All right, and if we're starting here today, we want to know how much, we want to know if we're making these payments, we want to know what the present value of those payments are in order to make a strong comparison here, okay? Because they're making payments at the end of each year for 4 years, okay? So we want to know in today's value, right, what those payments represent. So we're looking at the present value of an annuity, and when we jump up to that table, it was at 8%, and it was for 4 years, so we're using a factor of 3.312, right? Right there. So we take the 55,000 and we multiply it by the 3.312, and we end up with $182,160. So for Tanner, come on pen, Tanner, we end up with $182,160. Okay. Oh, I'm sorry. Make sure you rewind and pause that video if you want to copy all of that down. Sorry about that. Okay, so now when we look at Phoenix, it says, here's today. T-O-D-A-Y. Boy, oh boy, oh boy, I can't even spell. T-O-D-A-Y, right? Here's your 1, here's your 2, here's your 3, here's your 4, right? It says Hobart is making a single payment of $250,000 at the end of the 4 years, and it's at 8% interest. Okay, so the $250,000 is a lump sum, and we want to know how much that would equate to in today's dollars. So that's a present value. So we come up here to the present value of a dollar table, and we look at 8% for 4 years, and we see that the factor is 0.735. So we take the 250,000 and we multiply it by 0.735, and we end up with $183,750. So for Phoenix, we end up with $183,750. So the question is, well, which one, if Hobart needs new manufacturing equipment, which company are they going to buy it from? Well, on the surface, you're kind of like going to say, well, oh yeah, I'm going to buy it from Tanner because it's, less expensive. Let's see, 183 minus 182, 160, 0, 9 from 6 is 5. So it's $1,590 cheaper to buy it from Tanner than it is to buy it from Phoenix, right? Over the course of 4 years, which is approximately, all right, well, let's do the math here. 4 into 15 goes 3 times, 12, 39, that's 9, 30, 7. That's about $397 and change per year, okay, that you're going to save on that equipment, all right? Now, if you look at number 2 here, it says, in addition to the present value cost of the equipment, what other factors should Hobart consider when deciding upon which company to purchase the equipment from? I mean, some people will just go and say, hey, I just want the bottom line, and the almighty dollar is, what's important. I'm going to end up saving $1,590, so I'm going to go with Tanner. But just because you're going to save money, it may cost you in the long run. Okay, you have to look at other factors, and there's a variety of things that you can come up with here. Your solution manual says, okay, well, what warranties are offered by the 2 different companies? What's the reputation? Customer service, right? Customer service is a big factor. Okay, um, you know, if you buy anything on the internet, and you know you want to you need to speak with somebody, can you get that service? I mean, let's face it, we're global now. It's not like, oh, I can drive down the street and go find that company and talk to somebody in the building. Okay, now you're buying on the other side of the United States or from another country. Customer service is huge. All right, and the reputation of the businesses are important. And has the company been around? I mean, is this a new startup where they're going to be here today and gone tomorrow, or have they been in business for quite some time? Just because they've been in business for quite some time, let's say 25 years, doesn't mean that actually makes them, I mean, that's a factor to consider, but that doesn't, you shouldn't base your decision on that factor alone, because there are companies that I know of someone who had a reputable tuxedo rental company, and he was in business, some 20 some years. And today, people don't rent tuxedos the way they used to, for weddings and stuff like that. They, opt to do suits because the rental of a tuxedo is very expensive, and less people are getting married. It comes to proms, less, more of the younger kids are going with suits instead of tuxedos. So even though he was in business for 25 years, he ended up going out of business. So you can't always just say, okay, the financial stability of a company, by its longevity, is a determining factor. So you can think of these and other things that could apply. But for me, a huge one is the customer service, and also warranties or guarantees on the equipment themselves. I mean, if they have extended payment plans, you can factor that in. The point being here is that you don't just always rely upon the money, all right, in order to determine which company you go for, but you do have to do the math so that you know what you're looking at and whether $400 a year is worth it for you. Okay, so those are just some things to consider. All right, and with that said, we're done with the time value of money exercises. I realized that there wasn't that many, but again, you've had, for students, they've had this before, and for math, for business or math applications. If you need more practice, go back to those videos, because they were worked out just like you're seeing these ones worked out. So there's plenty of uh, practice that you can get by going into the math for business and application section. And of course, if you don't understand something as far as the theory or concept wise, rewatch those videos. And if you still don't get it, then feel free to contact an instructor. I mean, that's what we're here for. All right, so with that said, we're done with this, and we'll actually be moving in the next series of videos doing the assigned homework problems for the end of Chapter 7. All right, see you then.